and welcome to Market Moves. Today's worst performer on the 200, and it's by a long way, Mount Gibson Iron. It fell 50%, down to 20.5 cents. Today's best performer though, Bradken, which rose 36.5%. More on them a little bit later, but first let's check out on how the broader market finished the day. It ended up closing about 0.6% off, which is actually a bit of an improvement through the afternoon. We're sitting about 0.9% off there at about 3 o'clock. So a late rally to finish the week, but still a down day. Performance of the different sectors, most sectors in the red yet again. Energy, once again, the worst performer, down a further 2%. Materials also down 1.2%. Other side of the ledger, we had industrials seeing the best gains. The only one making gains today, up 0.7%. 74 stocks rising today, while 107 fell, 20 holding steady. And in terms of index weight, the worst performers, ANZ down 12 cents. James Hardie also off. Fairfax Media also in there. Crown and Newcrest Mining. And the best performers, we had IAG leading the performance today. It was up 8.8 of an index point. Bradken also stronger with a rise of 0.8 of an index point. Sydney Airport, Amcor and Horizon also all making that list today. Now here to take us through what's moving markets and why, we've got Michael Kodari from Kodari Securities. And you too can join in the conversation with a question or a comment. Email us at yourmoney@skynews.com.au or by using the hashtag MarketMoves on Twitter. Michael, another down day. It's a pretty familiar theme. We had obviously that terrible performance last Friday on the back of the plummeting oil price. Monday also a terrible day. We saw some recovery on the Tuesday and Wednesday. But the story seems to be relatively negative, especially in that energy sector. What are you seeing in the market? Are people panicking? Are they all jumping ship? And what are you telling clients?
Yeah, look, there's a lot of people jumping ship. So, look, it's a very crucial time. There's a lot of uncertainty. Mining, oil, I mean, these are all companies in that sort of sector are price takers. So it's something that we've advised and stayed away from for the past 2 years.
Right.
We haven't sort of placed a trade in any of those sort of companies. So I guess there's a shift now. I think a lot of people are moving more towards the healthcare because, we age. So it's inevitable that we're going to age, but, you can't predict where the oil or the copper or iron ore price is going to go. So it's something that it's a sure thing. And if you're investing in the right businesses in those sectors, you're bound to do well long term.
Well, it's interesting you mentioned that. We did have Estia Health launching today. Terrible performance though. Now, are you suggesting that's a stock-specific performance as opposed to a bet on the aged care sector more broadly?
Look, aged care sector is very attractive, but then again, you got to look at the company itself. So, but it's probably one of the worst days to be in the market.
Right, yeah.
So it's not very positive. Everyone's selling shares. But, it's all about buying the right businesses in those sectors. Again, the sector could be very favourable, but if you're investing in the wrong business, if it doesn't have cash flow, return on equity isn't very high, they've got high debt levels, it's not going to be a good start. So, it's something that we didn't get involved with. But companies like Ramsay Health Care, again, they came out with positive announcements with their hospitals. So, those are the sort of businesses in that sector we've been investing in, and we've done exceptionally well.
Now, a very volatile week. I think there's like a 3% spread on where we started and where we ended, but we've ended almost exactly where we did begin.
Yes.
So what does this tell us about kind of a market consensus about what's heading? But for all of the fire and brimstone reports about whether or not the oil sector, where it's heading, it seems like in the end we've kind of settled where we started. So does that tell us that investors don't really know where it's heading, or that maybe they just think it's been a little bit overblown, especially with that energy sector? Look,
it's investors are uncertain. I think the transition from mining into other sectors of our economy is a question. So we had the housing, which was one of the questionable things. So if there's more resources going towards that, is that going to inflate the housing prices? But at this stage, we're at a very uncertain times. A lot of people are predicting 2015 not to be a good year. But you've got to look at it this way. Half of our stocks are in the energy mining sector. So you can't invest in the market. You've got to be very choosy and picky, and it's a stock picking market. So you've got to look at the sectors of the economy that are doing very well. So it could be telecom, it could be aged care, and then you've got to filter down and pick those exact stocks that are going to give you those sort of high returns with less risk that you're looking to take.
Okay, let's turn to some of the other numbers from today. The market hit a high today of 5,000 5,389 and a low of 5,308. Around 639 million stocks changing hands, and that was worth about $3.7 billion. So it seems to be about what we've been hitting pretty regularly throughout all of 2014. Now, in terms of stocks by volume traded, Mount Gibson was the most traded stock today. 60.9 million shares trading hands and going in the wrong direction. Fortescue also heavily traded, 33.6 million shares exchanged. Illumina rounding out that top three, sitting there at 30.3. And I mean, looking at that and seeing those kind of companies in the top three of volume traded in a negative push is quite disappointing for those investors. Now, for a look, when we're seeing the iron ore, obviously iron ore miners being sold off so heavily, at what point do you say, all right, maybe there's some value to be had here? Maybe I can pick up something or in the relatively cheap, in the hope, making a bet that maybe the iron ore price will actually turn around.
Yeah. Look, it's very, very hard. I mean, Mount Gibson's a company, this year their return on equity was 0.7%. Last year, their return on equity was 1%. So if you're investing $1 in this business, you're looking to get 1 cent. So,
right.
The bank gives you 3.5, 4 cents. So, maybe you should invest wisely. I mean, it's very hard. These companies are price takers. So if iron ore is trading at $70, then, their margins are going to be very low and very tight. So if you do want to get exposure to the iron ore market, you've got to stick with the big ones. But then again, if you're swimming against the wave, doesn't matter how good of a swimmer you are, you're going to get washed ashore.
Yeah.
And this is what we're seeing now. We've got the oil companies, the mining and gas companies. It's a very tough market. And it's not easy to find quality businesses because it's capital intensive.
Yeah, absolutely. Let's have a look at who were the bottom performers. Let's start off with the All Ordinaries. So those obviously were the top performers on the market. Bradken having an amazing day, really, up 36% in the end. Let's have a look at the bottom performers on percentage change on the ASX 200 today. And as we said before, when you see the current value equal to the value fallen, you know you're in trouble. It finished at 20.5 cents there. Very disappointing day for Mount Gibson Iron. Liquefied natural gas. Now, it has been very volatile this week. It's been sometimes in the top performers, sometimes in the bottom. Today down 13.5%, finishing at $2.70. And rounding out the bottom three, Sundance Energy losing 13.4%, finishing there at 55 cents. Rounding out those bottom eight, BC Iron, Atlas Iron, Oz Minerals, AWE and Skilled Group. And Mount Gibson Iron obviously in focus today. UBS saying it should close its Koolan Island forever. The iron ore producer has put its Koolan Island operation into care and maintenance mode following a series of landslides. Mount Gibson will make the decision on the future of the project before the end of June. The majority of the Koolan Island workforce will be made redundant, costing the company around $11 million. Adding to that uncertainty, Mount Gibson has revised down its full-year iron ore sales target to between 4.4 million and 4.8 million tonnes. I mean, this is the story, right? This is the story not only of the Australian market, but also the economy more broadly, because we're so reliant on on the mining sector to propel the economy going forward. When you're seeing even a volume downturn, obviously we've got the price side of things, yes, but when you're seeing volume also dropping, obviously because of mine closures or whatnot, does it make you think that we're going to see consolidation within this sector, that you're going to see some of the bigger miners picking off some of the choicer small operators, or are you just going to see them completely collapse?
Look, it depends how attractive they are. Obviously, there's got a lot of assets, there's a lot of potential. You see a lot of the large miners come in and overtake them. But they've got to have quality tenements. It's very hard, I think it's a sector you've got to be very careful of. I mean, Mount Gibson had a very good story 2 years ago. A lot of investors are interested in the company, but now a lot of people are sort of scared and thinking, should we exit and invest our money elsewhere? So, look, my advice for the past 2 years has been, Forget about mining, gas, oil. Look at companies in healthcare, telco, which is what we've done for the past 2 years, and they've performed very well. So it's not investing in the entire market, it's being very selective and investing in the right business, in the right industries.
But staying away from that resource sector completely.
Yeah, because it's very hard. If China's demand is slowing down and they're moving more towards being a services-based economy, it's very hard to sort of... it doesn't matter how good they are. You had Fleetwood, Monadelphous that service the mining sector, and you've seen them drop. And these were quality businesses. So if you look at Warren Buffett, he says buy quality businesses. But if the demand is reducing from China, which is Australia's largest trading body, it's very hard to invest even in the most quality businesses.
Okay, it's been a pretty negative week, but after this short break, we're going to see if we can get some positivity onto a Friday. We'll look at today's top movers. Welcome back to the program. Now let's have a look at some of the top movers on percentage change, starting with the S&P 200. So let's have a look at the top three on the ASX 200, starting with Bradken, rising 36.5% today, finishing at $4.53. Second best performer was Medusa Mining. It rose 10.5%, finishing at 74 cents. And rounding out the top three, Western Areas rising 8.1%, finishing at $4.16. Top eight, Evolution Mining leading the charge there, Horizon Oil, G8 Education, Oz4X and Nufarm. Bradken is reviewing a revised takeover bid from Bain Capital and Pacific Equity Partners. The new offer of $5.10 a share is down from an earlier offer of $6. Bradken says it is reviewing the proposal, acknowledging it comes at a low point in the mining circle. However, the board says it remains confident in the company's growth prospects and capacity for future earnings. A little bit of talk of acquisitions always gives a bit of a spike to the share price. When you're looking at potential takeover targets, how heavily do you weight that? Are you open to the idea of going after a company purely because it might be a takeover play?
Oh, look, you've got to be very careful. If it doesn't take place, the share price could plummet. So, they've gone from $6 to $5.10. It was a company that wasn't favoured as much. So you're always running into a risk. The stock could rise, but then it's volatile. It could, if it goes up 26%, it can come down 26% or 50% quite easily. So you've got to be very, very careful. And I think a lot of the technical traders tend to get back in on the back of these sort of announcements and buy and, push up the stock price. But the fundamentals of the business is what you've got to look at. So you cut the market noise.
Let's have a look at how the market's actually fared throughout the week, because it has been a really interesting week. The S&P ASX 200, now it's ended at 5,335 points, which is 0.4% higher, so almost inconsequential in the end. Best 5 performing stocks this week were Bradken, obviously on the talk, potential takeover, Medusa Mining, Magellan Financial, Beetle Resources and Qantas. Worst 5 though, Metcash being hammered yet again, well and truly out of favour, Skilled Group, Arium, Sundance Energy and Japara Healthcare. Now here are some of the day's upgrades and downgrades, and these are of course thanks to FN Arena. JP Morgan upgrading Nufarm to a neutral, raising the price target by 20 cents to $5. The upgrade follows a confirmation of weaker market conditions in Australia and Brazil in the first half and the fall in the share price to levels in line with valuation. The broker notes weak demand from the summer crop in Australia could lead to price and margin pressures in the second half because of an inventory overhang. This has been an issue for the last 2 years. Deutsche Bank downgrading Tabcorp to a hold, keeping the price target steady at $3.90. The dismissal of Tabcorp's appeal against the Supreme Court of Victoria's judgment in favour of the state government is a minor negative, but the broker believes the equity market was only pricing in a small prospect of success. Let's go back to the best performers of the week. Now, it's interesting to see Qantas come back into it. It seems to be on the back of those lower oil prices, which people assume will mean a higher profit margin based on lower input costs. How realistic do you think that actually is? Because if we're in a what everyone says is a very competitive airline industry, surely those savings in fuel costs are just going to mean lower prices to the end consumer.
That's right. That's right. I mean, look, what if the airlines are a very, very tough business. I mean, most overseas airliners are backed by the governments. And Qantas is one that's not. So it's very hard to operate these businesses. I mean, the only people that make money are the ones that sell the jets and the ones that are supplying them with oil, so or fuel. You know, you've got to be very careful. Qantas is one of the most quality airlines, which has had less disasters or crashes.
Yeah.
But, you know, again, tough business. You know, oil prices going down is great for Qantas, but maybe now's the best time to be selling Qantas because everyone else is buying back in. And, you know, sometimes it could just be overpriced, you know, because the public sees it as, you know, it's great, let's go and buy this stock. But, you know, how long is this run going to continue?
Yeah, absolutely. The big story we're going to have over the weekend, Michael, is the release of the Murray inquiry into the banking sector. Now, this has been hotly contested and talked about for what seems to be months, about how this is going to actually impact investors in portfolios, mainly because we're so heavily weighted into the big banks. Do you think there's a real downside risk to the Big Four? And do you see any opportunities from what we might see come out of that Murray inquiry?
Look, it's interesting. It puts a lot of risk. You know, a lot of investors are looking at portfolios going, you know, are they really priced that much? Should we sell down and rearrange? You might see a lot of that happening in the next couple of weeks. You know, but for me, we've got 4 of the best top 20 banks in the world, which is quite amazing. We've got a population of 23 million. But, you know, for us, you know, we do see a lot of risk there. We are reducing our portfolio size in the banks. And what we see is with the lower Aussie dollar and the aging population, one of the most logical places to put your money in would be in the healthcare sector.
Okay. And we saw Japara Healthcare do well again today.
Yes.
But just sticking to the big banks for a minute, because I think a lot of investors are probably watching this at the moment, concerned about what's going to actually happen on Monday. Now, we've had some analysts suggesting that maybe the big takeout will actually be a re-weighting towards the second-tier banks, looking at some of your Bendigos, looking at the Suncorps, etc. Is that what you're doing? Are you moving across? Or are you saying that you're sticking to your preferred sectors just overall, going to your healthcare and your aged care?
Look, for us, we've had a good run with the banks. You know, we've been very happy with the returns we've received. They give you very high yields, but now maybe it's a time to rearrange portfolios. So we've gone into companies like, you know, your Certex, ResMeds, your Ramsay Healthcare, TPG Telecom. You know, it was one that we recommended every month on Sky, and it's gone up 460% in the past 2 years, and now it's in the top 100.
Okay.
So those are the sort of businesses we want to pick. Less risk, less exposure to China's growth, and you know, companies like Domino's Pizza. You know, if the economy is doing very bad, you know, people still buy pizzas for $4.95.
Okay, but so you're making a bet, though, it seems, on the Australian economy, the strength of the Australian economy, at least relative to, say, the Chinese economy or some of the overseas risks. There seems to be a lot of negative. Well, there's a suggestion that the Reserve Bank might even have to look at cutting interest rates early in the year because of some weakness or softness in that domestic economy. Is that something that's concerning you, and how are you defending against that?
Look, the economy is not very good. You know, I don't think people realise, but if you look at businesses out there, you know, they're struggling. You know, half of we've got a lot of money in the resource sector. Demand is reducing, so we've got to provide those people with jobs in the other sectors of the economy. Now, that could be housing. It could be healthcare. You know, the government's got a very challenging job in terms of trying to create more jobs out there for these people. That adds a lot of uncertainty. Are we going to have the same growth? I think we need more stimulation, and I think the RBA might cut rates. There's a very good chance that they might cut rates down. But then again, you know, we don't think much forward too, so we are reactionary in such a way.
Absolutely. Well, unfortunately, that is all we have time for on this edition of Market Moves. A big thank you to our guest host, Michael Kodari from Kodari Securities. I'm Carrington Clark from the team here. Thanks for your company.
The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.